Actually happened a lot when I first started trading. We were trading on a proprietary system, and the system used to go down all the time, and we were trading size at that point.
Oh,
Oh, it was a nightmare. For lack of a better way of putting it, it was a nightmare.
yeah. When I first started trading, we did everything by hand, so nothing ever went down unless somebody got sick. So
That's
every,
funny. That's really funny, actually.
yeah, very strange. The first time we got a Quotron machine, it was like really strange. I guess that was around 1980.
My first live quotes were a beeper.
Ah, yeah, and it was all hand signals, and on the CBOE was all hand signals. Um, and
That's definitely one regret that I have, not actually ever being on the floor like that for even just to experience it.
oh my gosh, it was so much fun. What a fun job. I have so many fond memories of all the floors I was on.
All right, I guess we can get started. I don't want to hold everybody up. Obviously, we want to make this a midday chat session to try and get through as many questions as possible. We purposely worded it again. What are some of the frustrations that you want to get some help overcoming, or at least address, get some different context on it? And I put a little teaser in the email today, Marion, about learning the big one thing that most traders just will never understand, never learn, never give themselves the chance to learn. And in the comments that people sent over, there was roughly, I want to say about 25% of the people had the same issue,
Oh,
which is a lot.
well, that
That's a
is.
lot with such an open-ended question
Right, right.
or
And it wasn't
choice. It's a lot, and I guess I'll just switch over to here now, and I'll start copying and pasting them. But I wanted to get the first one up here right out of the gate, which was consistency by a mile was the number one. So we have a couple of them on here. Consistency in profitability, not knowing what is the next step for the next level. Maintaining consistency, knowing what I should do versus taking impulsive trades. And actually, that's interesting because they're literally diametrically opposite there. Knowing what I should do versus impulsive trades. It's literally saying I don't know what I to do. you know, inconsistent performance. Um, make money consistently. Next, we have I didn't write all of them down, but two, not being consistent, not executing my trade plan, translating irregular performance into consistency. So actually, that person there who wrote not executing my trade plan, translating irregular performance to consistency, they're actually answering their own question in that particular one, because the trading plan is the entire point that we want to get across here. Not being consistent in my results, and the last one here that I wrote down is inconsistent results. Now, we discuss it a lot in the game plan meeting that we don't make things as challenging as they probably need to be with indicators and how many different things that we look at. And anybody who's in the meetings with us in the morning can attest that we keep it as simple as possible for a reason. And I know that we've had this discussion a couple of times that most experienced traders do not have a lot on their screen. It's usually candlesticks, maybe a couple of moving averages, and if one other indicator, two at the very, very most. I just want to say most traders never understand. They don't get to the point where consistency in your P&L comes from consistency in following a plan you believe in. There's really no other way to put it, because if you don't have a plan, you're not going to be consistent, because then you're trading all over the place at the whims of whatever's unfolding that day. And if you do have a plan and you don't follow it, that means you don't believe it works. Is that putting it too strongly, Marion?
No, but you know what? I wanted to address something else that before we get into the trading plan part of it is expectation. Because are there expectations that they're going to, if they make $2,000 on Monday, that then they're upset because maybe Tuesday and Wednesday they either lose a couple $100 or only make a couple $100? And that's not unusual. You can't have consistent days because there's not consistent opportunities on days. Does
That's
that make
very
sense?
yeah, no, it's actually very interesting. I wasn't putting the consistency in context. I was putting it in the context of up or down, not making money on a regular basis. But actually, yeah, consistency in your expectations or what you should expect will have an absolute effect on what you perceive to be consistent. Yeah, honestly, I didn't even think of that. You're right.
Okay, so what I would say is don't look at it from day to day. look at it from week to week. Or month to month, because we could have a few days in a row where it's really tough to find any. You can find some trades, but they're not going to make you a huge amount of money. And other days, which it seems almost easy to make money. So if you say, okay, every day I have to make $500, that expectation is really a tough one, because there are days you're not going to be able to find those trades. So rather than say I have to make $500 a day, how about more like I have to make $2,500 a week?
I like the idea of stretching it out a little bit further, because whether you're running a trading business or any kind of business, it's going to be very, very rare where day by day you're going to be reporting results and getting frustrated by what happens on a day-by-day basis. Never mind the traders who beat themselves up on a trade-by-trade basis.
Right, right. So, yeah, you're probably right. I thought maybe it would be too difficult to, if you did it month by month, which I guess actually most businesses do your P&L by month.
I do mine month by month. I judge my execution of my plan day by day. I judge how I traded that week based on if it was a good week to trade or not. So I kind of like Saturday's a big day, which I think most traders should take advantage of, because you're disconnected from the emotional aspect and quite honestly the exhaustion by the time Thursday and Friday comes around. I mean, I don't know about you, but sometimes trading could, physically can really wear you down. Well, mentally wears you down physically by the end of the week. And then Saturday is when I review what type of price action we had during the week, and then I look back and see whether or not did I trade well based on what was available. And I think that kind of ties back into what you had said before, Marion, about you can't judge yourself. I made 2,000 yesterday, now I need to make 2,000 every day. You can't pull money out of the market if it's a really bad tape. And by the same token, though, you have to make sure you do earn what you're supposed to when it's a good tape. So I always talk about it as a business. And to me, there's really no other way to put it. There's no way in the world, if you're going to open up a business, go and sign a lease, get inventory, or whatever type of business it is, that you're going to say, you know what, every day I'm going to do $500. What business on the planet? I mean, maybe if you're an established business, been around for a long time, you can absolutely forecast your projections based on how many calls you make and that kind of stuff. But trading is a little bit different than that, because you can predict how many phone calls you're going to make based on somebody being interested. But trading is different forecasting that way, because you have no idea what's going to happen tomorrow. Look what's happening in the market right now. Right. As we speak, literally.
Yeah, true. Now, anybody who's in here, do you want to weigh in on, does anybody want to, elaborate? Is it more the frustration of not making, the consistent money, like $500 a day? Or is it seeing a trade that's really easy, knowing where to get in and out, and then on the next day, you're like, okay, I have no clue where I'm supposed to be getting out of this. I have no clue. This does not see, I'm not reading this right, or I can't see it.
There were a few people that typed in about consistency in trade management.
In trade management. Okay.
Yeah, which I think that's a whole separate discussion, because I think first and foremost, consistency has to come from the consistent way that you look at the market.
Right, and also your confidence in getting into the trade that it's a good trade. If you get into a trade saying, I think this is good, I think this will work out, then you're scared that you don't know where to get out because you weren't totally confident getting into it.
Yeah, I've seen too often, and actually done this myself, where I put a trade on, and then you hope the market matches what you want it to do, as opposed to you saying the market's doing this and I'm going to join it. There's a big difference between the two.
Right.
So, it's interesting. Consistency is relevant to the stage that a trader is also, because newer traders, when they first come into the business, you very rarely will hear newer traders come in and say, man, I just want to be consistent. Most people, and again, I'm speaking from the proprietary trading world, which is most of my background. Most people come into the business saying, I want to learn how to make money like that guy in the corner.
Yeah,
that girl
you know what?
corner.
I agree with you, and I'm not even from that side of the business, but I think that's exactly right.
Which also, again, like you had really brought up a good point, that really affects the context of how you personally define whether you're successful or not. Because you could be somebody who's just knocking it out of the park within the first, and let's say first year, where you're at the point where you're making a good regular living. But you're comparing yourself to somebody who's been doing it for 15 years, who's making $50,000 a month, and you feel like you're not doing well, but you're actually crushing it making good, consistent money like that within the first year. So context, it's a huge part of it, but you have to compare what you're able to do now and run your business. There's also a bunch of questions about being frustrated about uh, not being able to trade bigger.
You know what? And I actually can understand that, not being able to trade bigger, but if it does help, if you can trade a small amount, because then you can have more confidence in holding it and seeing where you made a mistake without costing you a lot of money. But if you can be really consistent with a small amount, and I know it's really hard when somebody's trading, people are trading thousands and you're only trading hundreds. But it's like learning to walk and run, that if you walk really well, then you can run, or I guess ride a bike, or some kind of sports, that if you learn the technicals really well, then you can jump ahead. And I think that's very, very true in trading.
Do you think that we don't know the context behind the question, but do you think that, I took that a little bit differently. I took the question as not being able to trade bigger, meaning they didn't have the money to trade bigger.
I see.
I could be wrong, which is actually perfect.
Okay,
Why
no,
we see these from different perspectives.
Yeah, we can read these questions differently.
Yeah,
that is a frustration, and unfortunately, there's so little you can do about that. But I can see that also being a real frustration.
Mm-hmm. I think though, if it's a matter of having more money, I think you have to let that go. Because if you're constantly feeling like you're underachieving because you don't have a giant trading account, you're never going to appreciate what you are making if you are making consistent money, and you'll actually see your results in a negative way because you're not going to be satisfied with what you're doing. If you could trade bigger because you had the money, you would be. So there's just, I hate to be so strong about that, but you can't focus on what you don't have. You can only build your bank account up and your trading account up from what you have available. And if you're focusing constantly on, if I wish I had more money, I wish I had more money, go get your trading licenses. You can get unlimited leverage.
That's true. That's a good point. If you're right, if you have real confidence in what you're doing, that's actually a really good point. The other thing is, I think it can kind of be dangerous to say they're all making money and I'm not because I don't have a lot of money. So then you take risks that maybe you shouldn't be taking. To try to build that up faster. But actually, I think, Pete, that's a really good point. If you really have a lot of confidence and you know you're doing well, go get a license. People give you millions of dollars of trading privileges.
Not a question. Whenever I interviewed somebody, it was always a common question of how much money can I trade with, and I always had the same answer, and it was essentially show me how much you can handle. I never put a limit on it. I always said you have to sit down and trade, show me you can manage risk, and then we'll talk about more buying power. I will tell you that from the prop world, you will never be limited in the amount of capital available to you if you can make money. You will only be limited by the fact that you're showing that you can't handle managing risk. That I know for a fact.
Right. So if you learn to manage risk with a little bit of with your own money and just a small amount, and you've really got it down, you'll do very well in the prop trading world.
I agree. I want to touch on this part here, and then we'll get on to the next one where it says knowing what's the next step for the next level. So let's assume somebody feels like they've gotten to the point where they're consistent. Actually, I shouldn't even say feels. Their track record shows that they have consistency now, and they're like, all right, what do I do next? I usually have three things that I work somebody with, and actually one of them is relevant to a question a little bit later on. And the first one is trade bigger. You know, see my typing coming in again. Trade bigger. You know, if you go from 100 to 300 shares, go to 300 to 500. If you're getting consistency, here's the key. You're trading bigger the same strategy. You're not all of a sudden, wow, I made money in stocks this month. Now I'm going to go start trading futures. I mean, master the strategy that you're trading now and start to trade it a little bit bigger.
Oh, I actually agree with you. Right. Don't jump over to Forex or commodities or currency trading. I actually agree with you. I think that's a huge mistake some people make.
And then I believe the next one would be to trade more positions of your edge. If you truly believe you have an edge, I firmly believe that you will find more than one trade that matches your edge throughout the trading day or trading week or whatever time frame that you're trading. So now you go from trading your consistency and whatever share size you were comfortable. Now you move to trade that same strategy with bigger share size. So you're actually giving yourself a raise just by trading a little bit bigger. Next thing is let's assume there's multiple trades that unfold during the day, and up till this point, you've only been making one trade at a time. Now you spread that same probability over 2 trades or 3 trades or 4 trades. And trade management over multiple positions, obviously, a very different conversation, how to manage it. But then you take the next step of more positions, and then ultimately you learn how to hold longer, maybe expand your time frame a little bit more, but not necessarily changing the core strategy. So really, to me, is you don't want to start jumping strategies until you can learn how to be consistent. Get comfortable trading out of your comfort zone a little bit. I'm not saying going from 100 shares to 1,000, because that'll obviously affect with you mentally a lot. And then learn to allocate that same strategy to more stocks at the same time, and ultimately you're allowing your probabilities to play out faster, which ultimately, in my opinion, one of the biggest things is it diminishes the significance of individual trades. And I can't stress how important that is for an individual trader, because we also got a lot of questions or frustrations about risk and hesitation and that kind of thing. Not a question when you're trading 3, 4, 5, 6, 7, 8, 9 trades in a day that all match your strategy, and maybe even 3 or 4 or 5 of them at the same time. One trade is not as relevant as allowing your probabilities to play out over every trade. I mean, if we just took one trade a day, you're really limiting what you can do, assuming you have buying power to put on more than one trade. All right, so I'm actually going to hop into the next question. So I hope everybody got something really valuable out of that. Consistency, ultimately comes from your strategy and then following it, and then there's certain steps to start to trade at the next level. All right, the next one we have here is frustrating for me is when volatility is low and no trading opportunities emerge. Now,
that was my biggest problem, my biggest mistakes, my biggest learning. What I have to learn the most is because that's what I always call inventing trades. And if you have to walk away from the computer, because it'll kill you every time. It really, I made huge mistakes by looking for trades, justifying my trades when none existed. And it is frustrating, and that's why I did it, because I wanted to make money and there was nothing to do. So I thought, I'll find something to do.
I actually thought about this before I put this one in, and this is the part of the sentence that really struck me the most. They're literally admitting there's nothing going on. And I can understand why it's frustrating, because you need to, or you feel a need that you have to make money. But I want to get back to what we said before. Trading's a business. It's not an ATM machine. And you need the context that you are going to the market looking for opportunities that match your strategy. If they're there, fine. If they're not, that's got to be fine too. Because if it's not fine, you're going to throw a lot of money away because you're bored.
It'll erode your confidence also, and that's what you want to keep working on, your confidence, because that's where you're going to get your consistency, from your confidence. So if you're only taking the best trades of the day, and your best trades, and holding them through the level where you're supposed to, then it'll, as you're making, even if it's little bits of money at a time, you'll gain confidence in it. But taking these kind of trades will just erode that.
I agree. It's kind of like off subject and whatnot, but if you're finding yourself over trading because you need the money, I think it's a much smarter move to get a part-time job while you're learning to trade until you can turn the corner to pay your bills. It will allow you to trade better because you're not forced to take mediocre trades or trade for the action. And look, I've been there. I've had multiple jobs when I first started trading, and look, if you guys know me or don't know me, I'm a straight shooter. Don't ever feel like a part-time job is beneath you, because you have to really weigh what's more important to you. Is turning the corner and having a long, rewarding career as a trader more important, or is the belief that a part-time job is beneath you more important? When you weigh out what's really more important, you set your priorities. If you're struggling especially in the early part of your career, or if you're getting close to the end of your capital, first of all, don't wait till you get to the end of your capital. Do it before you need it. It's like going to the bank. You're not going to get a loan when you need it. Do what you have to do to make your career last, because if you really want it bad enough, you could make it happen. But if you're overtrading, frustrated, that kind of stuff, secure some income coming in that at least pays your rent or your mortgage, or or something like that, and continue to learn how to trade. And actually, I have a story of a friend who was just recently a full-time day trader, and she was asking me for advice, and she's like, oh, but I spent this money on doing this, and I spent money on that, and I spent money on that. I said, look, you learned how hard full-time day trading was. Now go use that same experience as a swing trader while you work in your other job full-time. So you have the best of both worlds now. You got a $3,500 professional education. Go swing trade. She's like,
Yeah.
I never thought of it that way. So frustrating is relative. I think again, I think maybe context is the context for this meeting. Because it also depends on who you're saying. Because I could just as easily come back with a very hard answer. If you're telling me you're frustrating, volatility is low, there's no trading opportunity, I could come back just as hard and say, why are you taking trades that don't match your criteria? I go right back at somebody, but we want to give as many different points of view on that as possible. Next one is almost the same question, but said a little bit differently.
Okay. Overtrading. Overtrading.
Yeah, this person's basically saying I'm in front of my machine all day, and it's hard for me not to look for a trade. I think the other person was saying I'm frustrated when nothing's going on. This person is trying to find something.
Right.
I think the context is just a little bit different. I think we've all. I guess what I wanted to put in the context is we've had multiple conversations about taking mediocre trades, and we spend a lot of time in the game plan meeting room discussing. I could see how you could justify that trade, but it doesn't make it a good trade. And I think you need to do that to yourself all the time, because the closer you get to where you're trying to rationalize a decision, you immediately say, I can't make this trade because it's going to cost me money just for not being bored. You're better off going to walk around the building or something. So overtrading is absolutely normal, but it is not normal for somebody who's making a consistent living. So if you want to get to the other side where you're making good money, overtrading and not being frustrated about lack of opportunity has to be a core part of who you are, that it can't bother you. You have to avoid overtrading, and you can't let lack of opportunity frustrate you. Now, I'm not saying that if you have bills to pay that you shouldn't be angry that you didn't make money. That's not what I'm saying at all. We're saying that if there's nothing to do, it doesn't make sense to throw money away because you're at a computer.
And say to yourself, if I take this trade, this mediocre trade, let's say you have $25,000 in your account. If I take this mediocre trade, I could find myself with only $24,500 at the end of the day, because there's a good possibility it's not going to work out. And then you're going to have to work twice as hard to get back that $500 as to make the money again. It's better not to lose the money. Think of this. Mediocre trades have a greater possibility of being a losing trade, and you want the greater possibility of every trade being a winning trade.
Yep. I actually have some kind of that transfers over to this that I recently heard. Like, I'm trying to lose weight right now, and somebody said this quote to me that is so relevant to this conversation right now. It's nuts. They said, everybody hates going to the gym. Well, relatively, kind of like a cliche. Everybody hates going to the gym. And the guy said to me, it's easier to not put it on in the first place than it is to take it off.
Yeah.
And I'm like, wow, you're right. Put down the donut. All right, so this one I think is going to be a little curveball for you, Marion.
Okay.
All right?
All right, I'm ready. Not knowing who to trust or listen to and choosing a guide for my trading education. Oh, I do know what you mean. Pete and I talk about this, and there are hundreds of thousands of places you can go out there to get an education, and probably 90% of them are snake oil salesmen. If someone's going to tell you a trade, say, I'm going to give you trades, and you're going to make $100,000 this year, walk the other way. You don't want anybody who's going to tell you, I'm going to give you the trades. You want the people who tell you, I'm going to teach you how to trade. I'm going to tell you what kind of trades to get into. I'm going to have you learn how to find the trades. Don't let somebody else find the trades for you. Learn how to find them yourself.
I agree. When I saw this question, I thought, wow, this is one that a lot of people would shy away from actually even putting in here to talk about, considering this is one of the things we do. But
Right.
I'm pretty adamant about the answer to this because I think it really boils down to, is somebody trying to teach you strategies and how to apply those strategies, or is somebody telling you how much money they're making themselves? If somebody's constantly talking about themselves and how well they're doing and all that kind of stuff, they're not teaching you, they're bragging to you. It's
And
there's some.
also how much money they're going to make for you. You don't want someone who's going to make the money for you. You want to make it yourself. You want to learn how to make it for yourself so you don't need anybody else.
I agree. I think core knowledge, teaching you core knowledge and how to apply that knowledge is really what makes a good educator, whether it's a trading educator or any type of educator. Because look, the bottom line is there's core knowledge you need to learn, and then from that core knowledge, you have to learn how to turn that core knowledge into a skill. And a good educator, again, trading educator or otherwise, is going to teach you how to do it. Meaning they're showing you what to do, how to do it, and then they're going to help you improve your skill and execution so that you can get better. So a good guide will teach you the knowledge, then teach you and stick with you to show you the skills, which quite honestly as well, Marion, that's actually where a lot of students drop the ball, is that they don't want to pay for coaching. It's very, very common to hear, I'll figure it out on my own after they get the initial instruction. And let's face it, there's a lot more depth than just what you might see in a video or reading a book or an outline or that kind of stuff. So the continuing education is just as much as the initial education, but you should try and get that from the same type person.
And it's actually fine to learn it on your own, but just know this, that you're going to pay for it one way or the other by losing money. And losing your mistakes can be great educators, but they could also cost you an awful lot of money.
Not a question. I mean, you're going to pay for it either way. Are you going to pay to the market and learn a little bit longer, or you're going to pay somebody that you trust? So this person used a good way to word it, trust. You're going to pay somebody you trust to learn sooner.
Right, I agree. So just be careful who you trust. So if they're telling you how much they make or how much they'll make for you, or they'll just send you trades every week and you can put them on and make billions of dollars, don't trust them. Walk the other way.
I told you about the email I got yesterday. The woman who sent the email over, her exact email was make $121 per minute in the first 90 minutes of the day. She literally got to the point where she's saying how much money per minute. Per minute. I mean, come on, really? All right, next one. It's frustrating to lose money.
What frustrates you most? It is. And you know what? We're all human, and I think that's a huge human emotion, and it's one of the ones that's hardest to get over. I think of all of the frustrations in the market, it's the losing the money, because we're not in here to lose money. And it's so anti who we are, to be okay with losing money. But you have to be.
I will say the traders that I have worked with, obviously nobody likes to lose money. So let's just put that in the beginning of the answer. However, it is. I've seen it literally go away in the blink of an eye for a trader when they finally believe their system worked overtime. And I don't know if I can explain it any differently, because literally what happens is, for some reason, it snaps in your mind or something just clicks where you get to the point, well, if I actually believe this works, one trade doesn't matter. What matters is whether or not they work all the time or overtime, I should say. And I've literally seen traders' confidence levels change in a snap where they were trying something, but something inside of them was making them see it as, does this work more often than it doesn't? And when that clicks for you as an individual trader with whatever strategy you've been taught, learning, tested, whatever it happens to be, losing money stinks. I'm not going to say it's not. However, it becomes a completely different part of running your business if you believe you are running a business that makes money. period. There's no other way to look at it. If you open a business and believe you can make money, are you going to be pissed off that you have to pay the rent?
No, but you know what? But you can be pissed off that your hot water tank broke, and it's okay, but you have to get over it.
I agree.
Right?
I agree. I just think that I think losses in general have to be put in context because first there's a bad trade. There's a difference between a
Right.
bad trade and a trade that loses money. And let's assume you got to the point where you're reducing bad trades. You're eventually getting to the point where you're minimizing them. Saying you're eliminating them, I think that's very
No, we
difficult for
also
anybody to
did
say.
too.
Yeah, I don't think anybody would ever be able to say I've eliminated all
Yeah.
my bad trades. But let's assume you get to the point where you've reduced them and minimized them, and you fully believe you have a business that makes money. Losses now become a business expense, and actually you brought up a good one. Like your freezer breaks or what have. Yeah, of course you're going to overreact and be like, all that meat is going to go bad, or whatever it happens to be. And let's equate that to holding a bad trade too long or something like that. That I could definitely see being frustrated with. But I will tell you this: you absolutely need to get to the other side where trading losses bother you less because you believe you could make money. If you believe you could make money because you've seen your strategy play itself out and you followed it flawlessly, there's very little reason to allow regular trading losses that are a part of running your business to bother you because you believe you could make money. There's no other way to put it. And I feel so strongly about that because I've even experienced that myself. When you believe you could make money, losses take on a very different meaning. Let's see. Go to the next one. If everybody has any questions, please type them in. I'd be more than happy to stop. All right, so next we have dealing and working with emotions that arise during the trading day that can negatively affect decision making and how to address self-sabotage.
I think two of the worst, the most dangerous emotions are the opposite, and one is elation, when you think you can do no wrong because you're trading so well. Always check yourself on that one and say, okay, because then you try to take too many risks.
Yeah, I actually think people need to watch their discipline more when they're trading well because you can slacken your discipline and allow yourself to lose more.
Right. Hey, this worked. Hey, everything's working. Oh, I got this. And then you kind of pull out from your tight strategy and say, oh, well, this isn't quite, this hasn't, maybe broken out yet, but I'm going to get it early because I know it will. And I've been doing so well with any of these breakout trades that I know, and so I'm just going to make a few extra $100 by getting it before it breaks out at 80. And that can really, really sabotage your trading. As much as despair, because then you try to make up for all the money that you're losing, and particularly staying in the same stock you lost money in. Revenge trading.
Revenge trading is all too common. Revenge trading.
Right.
So I guess what are some of the negative? They're obviously talking about negative emotions here to affect it. What are some of the negative emotions? Obviously, there's anger. You have to really put into context what you're angry about. Are you angry that the stock didn't do what you thought it would do, or are you angry that it didn't make money? You always have to put that in context because look. The bottom line is, no matter what happens, you still have to take accountability. And the further you get away from taking accountability for what happens, no matter what, the more difficult it's going to be for you to be consistent. Because at that point, none of your results are caused by you. It's the market that did that, or the guy sitting next to me. Whatever. You can't let that affect you. So part of anger, frustration, all that needs to be put in back in your control. Fear is one that's very tough to get over because we talk a little bit about fear of losing money. Mm-hmm. Fear. We have one coming up here: uncertainty, risk, afraid to take risk. We pop that one in there just to get it on the board there. I know a lot of people that trade. They're mostly they're afraid of they're not afraid of failing because obviously you're not going to try and become a trader if you're afraid. I mean, it takes a lot of guts to pursue a dream like that and go and do it. So I don't think it's fear of failure or afraid. Or I should say, I don't think it's being afraid of not failing. I think it's afraid of failing before your money runs out. and then you have all
Okay.
that time invested.
I think this is actually where a trading journal comes in really helpful too, and not just write down the trade, but I was afraid if it broke out of 80 that I was not going to make the money, or if it wasn't going to go up, I wasn't. Um, I'm trying to think. I guess part of it is not having confidence in your strategy, not really believing your strategy works. I think that's where fear comes from, and then maybe just taking small trades, and only taking the best trades of the day. And I think we talk about that in the morning. Okay, these are the best trades for the day. And I think probably by the time people leave at 9 o'clock, they know where a breakout is or where we would be buying it.
Yeah, I also think we do a pretty good job of explaining when risk reward potential diminishes, which even though it might be a long or it might be a short, it's not the same trade that it might have been yesterday or the day before, because now the profit potential has diminished to the next support or resistance level.
Um,
So how would you address?
I'm trying to understand. I'm wondering if it's more if the fear of taking the trade is because they don't have confidence it's going to work and they're going to lose money, or fear that they don't have the strategy right.
Well, let's actually break it up. There's
Okay.
uncertainty, and then there's risk. Because I actually think they're two different things. I think uncertainty comes from what you're looking at in the market and how you're perceiving how it's unfolding, and then ultimately how you're going to interact with it. But I think accepting risk is different. I think uncertainty is, I
True.
don't.
True. That is true. You're right.
So I kind of, obviously they're related, but I think that they're two different things. Uncertainty comes from how you're looking at the market, and again, I make it sound like it's a commercial or anything, but with the way we look at everything in the gameplay meeting, we're looking at it the same way every single day. We're not one day looking at stochastics, and the next day we're looking at MACD, and then the day after that we're looking at something else, and the day after that we're looking at something else. Every single day it's the same thing. And a trader who wants to develop conviction, which let's say that's the antonym for uncertainty. If you want to develop conviction, conviction first starts with how you're looking at the market and how you're perceiving what you see unfolding. So uncertainty starts to diminish when you're looking at it the same way every single day, and it has meaning to you. So in other words, how somebody else looks at the market doesn't necessarily mean it's the same way that you look at the market. So it's always good to get ideas, but ultimately you have to pull the trigger on risk for an idea that you believe in. So uncertainty is a part of how you feel about risk, but uncertainty starts with how you choose to look at price action every single day. And you need to work hard on finding a structure for price action that you have an unshakable belief in, which actually that's actually the next one that I'm going to pull up here, which is building unshakable faith in my system. Before I put that up, I guess we'll just touch on risk there for a second. Look, I think there's taking risk, and I think there's accepting risk. Taking risk means you have no problem putting on a trade. Accepting risk means you have no problem if it's a losing trade.
Oh, true. Right.
So I think risk also becomes relative when you're accepting of the fact that in order to make a profit, there's a chance you might lose money, but then that money has to be a certain dollar amount that if it moves against you, you have accepted the fact that you're risking money in exchange for a potential profit. So I think uncertainty starts with how you're looking at the market. Risk starts and ends with whether or not you can accept putting that money in harm's way in exchange for your certainty that something's going to happen. So risk takes on a new meaning when you feel certain something is going to happen more often than not, which again gets all the way back to how do you look at the market to determine you have a strategy or not, which kind of works perfectly into this next one, building an unshakable belief, building unshakable faith in my system. So let's imagine, Marion, I walk into your office, it's lunchtime, you're having your tuna fish and potato chips, and I say, Marion, I hate to bother you for lunchtime, but I'm just having a real hard time having unshakable belief in my system. What would you say to me?
What did I say to you? Um, Well, first I'd ask you, do you follow your system consistently? And do you follow it to the letter, not veering off from your system? Because as many people as say they have a system, they don't trade the system. They trade it on some days when the market fits into their system. And on other days when there's nothing there, they don't trade in their system. They find something else. Well, the Bollinger Bands are telling me something different than my system is telling me. So I'm going to go with this trade in that system. Are you consistently staying within your system? Can you tell me yes or no?
And I would say most of the time.
And I would say, okay, then you're only going to make money you know what the problem is? If you're going to make money most of the time, then some of the time you're going to lose money, and that losing trades can negate your winning trades, because the part that you're not staying in, you can lose more than you're making on your most of the time trades. You have to be consistent in following your system to the letter.
Yep. Actually, if you don't mind, I'll just put that a little bit different.
Okay.
It's in the same vein, but if you're trading your strategy with consistency, that means you're allowing the system to play out over time. So let's just use a sample size of 10. If you know it's going to take 10 trades, you don't know if trades 1, 3, 5, and 7 are going to be the losing trades, but the other ones pay you. You know it's going to take 10 trades. So if you decide to take 6 good trades and then 4 bad trades or trades that don't match your system, you're not stopping at 6. It's not like you took 6 trades, you paused for 4 trades, and then you go back to starting at 6 to follow your plan again. You're literally diminishing the 6, and you're probably going back to 1. So what you're actually doing is you're expanding the time that you're allowing your probabilities to play themselves out. So you're actually, it's kind of like minus probabilities when you go off of your system, but when you have an unshakable belief, you don't veer off your system because, and this is the way I do it. So I just give you, for example, for me, I have to trade my system as often as possible for my probabilities to play out, and anything outside of my system is a negative. So I mentally play games with myself that if I go off my system, that's taking me longer to allow, for example, the 10 trades to play themselves out. And if I go off of my system, I'm going now from 6 good trades back down to 3. And in order for me to get to 10, now I have to make 7 good trades instead of just 4 that match my system.
Oh, that's well said. No, I definitely agree. Yeah. Scott's right. The market will discipline you, and you'll lose money, and you'll have gotten a small education, but at what price? A huge price, because you've just had a losing trade. So you can have the market discipline you, or you can stay with your system.
It's actually a good comment. And again, you got back to your trading journal before. I think a big part of the trading journal is making sure you pay attention to whether or not you were following it or if it was a tough market, because it's not necessarily the same thing. You could have done everything well and still lost money, but you need to know the distinction between, wow, that was a really tough 3 to 5 days, or I was distracted because I was fighting with my girlfriend for a week, or whatever. Right. So big difference between you traded well versus it was a tough tape. All right, next one. I think right up our alley again, Marion.
The market disciplines.
So now we have stock selection. Again, what frustrates you the most about your trading? Stock selection, identifying the best stocks to trade, generating consistently profitable trading ideas.
Well, stock selection, I think you get better at it over time, and that's why in the morning game plan, people will bring up stocks and we'll say, yeah, this is a great one. You picked out a great stock, and it's definitely a buy. But let's see what our profit potential is. Let's see if it's a buy here. And I think as you go on in trading, in time, you'll learn that. And then maybe that same type of trade comes up again, and you'll say to yourself, wait a minute, I know this one. And people often say, this is one to make note of. Print this one out and put this in your trading journal. This is what this looks like, or this pattern looks like.
Yeah, I think this comes down to how much can you handle in both your experience, your trading education, and your risk capital. I think that your stock selection needs to factor in all of those things. So let's just say, for argument's sake, you're a very well-funded trader, but you're a brand new trader. Now, you might believe that you can afford to trade a lot of different stocks and be involved in a lot of action, but your experience and your education in doing that does not warrant to do that. If you're a new trader with limited resources, that should immediately tell you what your stock selection should be, which it should be you want to attack trades that match the amount of money you can afford to risk per trade. So I think it's overlooked that you need to include your resources, your education, and your trading experience and your risk tolerance before you start to choose which stocks you're going to look at. You can't just be like, oh, let me look and see what's trading actively on StockSwitch today, and I'm going to trade whatever is the most popular, trending the most. That's poor decision making. You need to know what stocks match the characteristics, both from a liquidity perspective and a volatility perspective. So you're that delicate balance between opportunity and risk, and then you choose the stocks based on that. You can't go and pick a battle that you have no chance of winning before it even starts.
Okay, actually that does make sense. I actually hadn't even thought of it that way. In other words, don't even start looking at all the charts. Don't even start charting. Only chart the ones that you can trade.
Right. Well, for example, like we have somebody in our meeting in the morning, and everybody has different ways of trading and whatnot. So if she happens to be listening right now, it's not a big deal. It's well, 1 minute we're looking at Google, and then the next stock being called out is a $5 stock. That's a pretty big gap in getting a picture on which stocks you want to fight. Or a fight's not the right word, but going from from a $700 stock or whatever it is right now, I don't even remember, to a $5 stock. That's a pretty wide range of identifying which stocks match your criteria. I would. It's got to be hard to say, okay, those two stocks definitely match how I want to. Those are the stocks I found based on my trading plan. Do you agree, or am I taking it?
Actually, I disagree a little bit, because as long as if you, obviously somebody who's trading Google has a lot of capital to trade.
Right.
And so it doesn't really make any difference. I could see if it was someone who could only trade a $5 stock and they were looking at Google. But hopefully if the setup is there, that it doesn't matter if it's a $5 stock or a $700 stock, that you can make money on it, and you can trade that because your risk, you have the capital to trade them. I mean, I actually don't find a issue with that. I tend not to trade the really little guys because of the range in them is usually so small.
I'll tell you where my context came from. I think it's extremely difficult to manage trades that have such dramatically different price movement.
Oh, okay. I guess I can see that, right, because your mindset has to, you know what, I didn't think that. You're right. Your mindset has to switch. You have to switch gears, just even looking from one chart to the other. Right. And I think that's really difficult to do now that I think about it.
Because you're looking at what could be a blink of $5 in one stock to the other stock being where it could take 6.5 hours to move 40 cents.
Right. I didn't think of that. Yeah, you're right.
Good perspective, though. That's what's awesome about these meetings, is seeing something from different perspectives.
Right.
Let's see. The next one I think is a little bit, I wouldn't say strong of a statement, but I think it says a lot. I'm actually going to break this up a little bit. Frustrating part is presently is my limited exposure to trading due to time restraints, a lack of resources to trade as effectively as possible. So they're saying a lot in that one sentence. And then after saying how limited all their resources are, best trading opportunities in all global markets.
Okay, first I would say just you need to have one market and one, wow, that's a tough one.
Yeah, I thought that was interesting, and I'm actually glad that we're bringing it up and everything's anonymous here, because hopefully we can answer this person in a way that helps.
First of all, you can't trade. You can't find the best opportunities in all global market if you lack time. Because I know how much time I put in, and I am just looking at U.S. stock and options markets, and I have a lot of time. So the lack of time, you really have to narrow your source, your focus down, because then you know what, you don't do a real good job if you have such a wide focus, because you're just giving a small amount of time, you're just touching, tapping everything, and you're not going to be able to really dig into why a stock is doing what it's doing, or where your strategy can play out within that stock. I don't know if you think that also, Pete.
Yeah, I always look. I'm a huge believer in strategy before anything else, and in my opinion, it's much better to go deeper than it is to go wider. Meaning, master something before you try and spread yourself out. It's whether it's a business, whether it's trading, and especially getting back to something you mentioned before, Marion, which was confidence. Look, there is an invisible confidence bank that you're adding or subtracting to and trading every single day, and it's a heck of a lot easier to be confident when you really feel like you know what you're doing and it works, and you just trade that with consistency.
Right, true.
So, there's a couple of parts here. Obviously we brought this up because of the frustrating aspect of the question that we had asked, but limited exposure is that's kind of like a financial planning term, for lack of a better way of putting that. We want to increase your exposure in real estate, or something like that.
Right.
Kind of like you're balancing, your assets. But it's very difficult to worry about your exposure across different asset classes with lack of resources. That's it's, again, I put everything back in the business sense. It's very hard to be wanting to expand your business if you don't have time to run the business and you don't have the resources to do it.
And that way you can't be good in any one particular area, so pick out an area to focus on and get really, really good at that small little area, and then you can slowly expand.
I think that's really good advice, Mary, because this person clearly has a passion and understands what they're talking about.
Right.
Even getting to the point, using the right terminology for it's kind of like jargon, but it's the right terminology. But this is really important. I think my goal. They have a goal for the best trading opportunities, and to me, that's the most important part of all of this. I mean, obviously, we hopefully put some of this in perspective here, and really to think about what resources you have to decide what kind of business you can run and how you can allocate those resources. But I would ask this person to focus on this. My goal is to seek the best trading opportunities, and start there, and define what that means to you, and be involved in what you perceive as your best trading opportunities before you worry about global markets, before you worry about increasing your exposure. And you'll find that you'll end up being proud of yourself and confident, satisfied, with a passion to want to be better, obviously, to seek the best opportunities. But, look, give yourself a chance to succeed, and then let that success grow your business from within, instead of focusing on a lack of what you don't have. And look, we all do that. I mean, I'm not saying I don't do. Everybody does it. I wish I had more of this. I wish I had more of that. That's fine. But at some point, you have to say, look, I'd like to have six-pack abs too, but I got to do something to get there first.
Right.
So if I was, again, if it was me in the office and this person was coming up to me, I would have that highlighted on the magic marker board, and then we'd build out a flow chart below that to say, okay, let's focus on your goal to seek out the best opportunities with the resources and time you have, and let's make that happen in the short term. Let's make that happen over the next 3 months. Let's make that happen over the next 6 months, but put some definite parameters around what that looks like for you, so you're always feeling like every day is Christmas Eve, and you're moving closer and closer to where you want to be, and every day is exciting because you're participating in the market. You're seeking the best opportunities that you can take advantage of, and then maybe it could be a different conversation about expanding your exposure and that kind of stuff. But this person has a lot of passion. I would absolutely be focusing on what does the best trading opportunities look for you for what your resources dictate right now. If and when you succeed with that, then we could have the same type of meeting to expand.
Yeah, no, well said.
Let's see. Let's actually finish with one last one here because we're getting up on the hour. I'm sure everybody wants to get back to the market there. And this one's a relatively easy one, I think. Transitioning from trading earnings season, yeah, and killing it every day. So good to see you're killing it every day. To slow season and having to be way more selective. A little text message.
Well, you know what? Whoever this is totally understands, and I applaud you for understanding that that's exactly what goes on. That the earnings season can give you some great volatility and some great trades. And then once the earnings season slows down, the market's more often than not, becomes stock selective. And then you really have to kind of switch your mindset. I mean, you have to, obviously, whoever this is knows they have to. It is frustrating, but the first part is that, I think the best part is that you understand it.
Yeah, I took it the same way. This person literally wrote out perfectly what was actually going on,
right?
And they're actually admitting they're addressing it,
right?
So I think this person is really in control of what they are doing. The only thing I would say as a business advisor is, look, I'm sure you've heard businesses are cyclical, and we're trading businesses. I mean, there's no other way to put it. Right.
Think about retail. They do, I think it's 75% of their business between Thanksgiving and Christmas Day. So they have to have those real slow periods. They've got 11 months of slow business and 1 month of crazy business. So you know what the thing is, take advantage of the earnings season. If you kill it in earnings season, take advantage of that, and then just be real disciplined during the off season. And just remember that you have to. It's more often than not stock specific, unless we have a real trending market, which we haven't had this year so far.
Yeah, the entire year, pretty much.
Yeah.
So I think this is somebody who's really on top of their game. I think they're really looking at it the right perspective. I would have been a little concerned if they wrote "and not killing it every day,"
right?
But they're actually writing, "We're doing exactly what we're supposed to do when it's busy, and having to be way more selective when it's not." This person has a trading plan, and they understand what's going on. They're just a little frustrated that it's not hunting season all year. You know. So again, if I was sitting with this person, I'd be like, "Look, you have everything. You obviously have a plan because you know what it looks like from one stage to the next. You can tell when the market slows down. You would just like it to be busy all the time, and yeah, we would all like that. You know, I would say keep doing what you're doing and don't force trades that aren't there."
Right, I agree.
So I think good crowd today. Absolutely good crowd today. We'll call it a meeting today. Let everybody get back to seeing what's going on. Market's actually bouncing here a little bit. Good call on that 205 there in the spiders, Marion.
Oh, thank you.
Pretty much right to the penny again. So we're getting a little rally into the FOMC minutes coming out in a little bit. I guess we'll find out a little bit more what's going on with China and 205, 215, whatever time that is, about an hour from now. Just over
2 o'clock, and John Williams, who's a Fed president out in San Francisco, I believe, is going to speak also at 2 o'clock on the economy. So just be careful because it can get very whippy with the FOMC minutes come out, and also when any of these Fed guys speak. So just be disciplined and careful in your trading there. And often the first trade is not the right trade. So just be careful, guys.
Yep, if you're even going to trade it.
Yeah.
All right, everybody. Excellent meeting again today. I think maybe next meeting, we try and do them every 2 weeks. What we will do is we'll make next meeting about what goals would you like to achieve, and then we will give some suggestions about how to put the steps together to achieve your goals. We want to cover a little bit first, a couple of weeks, of how to overcome some of the things that you're finding to be a challenge or a problem now. Maybe we'll make a little bit of an adjustment going into, okay, these are my goals. Can you guys help me outline the steps to get there? So a little bit different twist on what we've done the first 2 weeks. Again, thanks everybody. Really appreciate it. We will have this video posted, I would say probably around this time tomorrow after getting it edited and all that kind of stuff. So have an awesome day. Have a good afternoon trading, and I'll speak to you soon.